Welcome back to the deep dive. Today we're going to be looking at future-proofing your finances. You guys sent over some awesome resources. This ebook, Future-Proof Your Finances, Investing and Saving Strategies for 2025 and Beyond, really stood out. Tons of great advice in here. So our mission today is to give you guys actionable tips you can use like right now.
Yeah, it's like having a roadmap for your money, like
Well,
any road trip. Before you can figure out the best route, you got to know where you're starting from, right?
totally. And that's where this financial self-audit thing comes in, right? I know
Mm.
it sounds kind of scary, but it's really just taking stock of where you are financially.
Exactly. And you know what? This step is so important, but people skip it all the time. It's
Hmm.
like building a house. You wouldn't start with the roof. This audit gives you the big picture, your income, your expenses, what you own, what you owe. It's like a financial snapshot.
Okay, a snapshot. And the ebook even suggests some tools to make this whole audit thing easier, right? Like budgeting apps. They mentioned Mint and Personal Capital. I actually use Mint. It's been super helpful for tracking my spending.
Oh, yeah. Those apps can be awesome. They categorize everything so you can see exactly where your money's going.
Yeah.
And some even calculate your net worth. That's everything you own minus everything you owe.
Gotcha. So we've got our snapshot. Maybe it's not as pretty as we'd like, but now we can finally start working towards those financial dreams, right?
Absolutely. What are some of your dreams? Dream vacation? Early retirement? This is the fun part.
A cozy cabin in the mountains for me. But
Yeah.
the ebook, it talks about smart goals. How does that framework actually, help us get there?
Think of SMART goals as turning those big, vague dreams into actionable steps. The book has a great example. Instead of saying, like, save for retirement, a SMART goal would be save $500 monthly into a Roth IRA over the next year. It's specific, measurable, achievable, relevant, and time-bound.
I see. So instead of retirement, this huge concept, you break it down into smaller pieces that are easier to manage.
Exactly. It's like training for a marathon. You wouldn't just run 26 miles on day one. You'd start small and gradually build up.
Makes sense. Okay, so we've got our goals. But we all know life happens. Unexpected things pop up. The ebook dives into building a solid financial foundation in Chapter 2. First thing they talk about is the emergency fund. Why is this so important?
Okay, think of it as your financial safety net. Job loss, medical bills, car repairs, life throws those curveballs. An emergency fund keeps those things from derailing your long-term goals.
Okay, so it's like a buffer. The book recommends saving 3 to 6 months worth of expenses, but honestly, with the way things are going, that doesn't feel like enough.
Yeah, you're right. It really depends on your situation. If
Yeah.
you've got a stable job, other safety nets, 3 to 6 months might be okay. But if your income's less predictable,
Mm-hmm.
or if you're self-employed, having closer to 12 months saved can give you some real peace of mind.
Yeah, that makes sense. So we've got our emergency fund, check. Now let's talk about budgeting. I've tried like a million different methods. None of them seem to stick. What does the book recommend?
So they cover two popular methods. First
Yeah.
one is zero-based budgeting. That's where you account for every single dollar. It's great for detail-oriented folks who want, like, total control.
Okay, so like knowing exactly where every penny is going, it sounds kind of intense.
It can be, yeah, especially if you're not used to tracking everything so closely. That's why the book also talks about the 50-30-20 rule. It's a bit simpler.
Right. 50% to needs, 30% to wants, and 20% to savings and debt. That seems a lot more flexible.
It is. It's a good starting point if you're new to budgeting. But remember, both methods are just tools. It's about finding what works for you and your lifestyle.
Right. Finding what works for you. Okay, speaking of things that need to be tackled, debt. Ugh, the dreaded D word. This is a big one for so many people. And the book dives into some different strategies, right? They talk about the debt snowball and the debt avalanche. Can you break those down for us?
Sure. So both methods are about paying off debt strategically. But they have different, like, psychological approaches. With the snowball method, you focus on paying off the smallest debts first, no matter the interest rate.
So you're building momentum, getting those quick wins to stay motivated.
Exactly. Seeing those small debts disappear can really encourage you to keep going. Then there's the debt avalanche method, which is all about minimizing the total interest you pay.
So you'd tackle the debt with the highest interest rate first, even if it's a bigger balance.
Exactly. This approach saves you money in the long run. But it might take longer to see those initial wins, so it really comes down to what motivates you more, quick wins or long-term savings.
I think snowball would be more my style. I love checking things off my list. But the book also mentions debt consolidation. What's that all about?
Okay, imagine you've got multiple credit card payments, all with different interest rates, due dates, minimum payments. It can get overwhelming fast. Debt consolidation streamlines all of that into one monthly payment. often with a lower interest rate.
Oh, so it simplifies things and potentially saves you money on interest. That sounds pretty great.
It can be, yeah,
Yeah.
but it's super important to understand the terms and fees involved. Sometimes consolidation can actually end up costing you more in the long run.
Good point. It's like anything. Gotta read the fine print. Wow, we've covered a lot already, and we're just in the first two chapters. But now that we've laid a solid foundation, I guess it's time to make that money work for us, right? That's what Chapter 3 is all about. Investing for 2025 and beyond.
This is where things get exciting. We're shifting gears from saving to investing, putting your money to work to build wealth. The book goes into all sorts of investment options: stocks, bonds, ETFs, mutual funds, even REITs.
Wow, that's a lot to unpack. Let's start with stocks. I know those are ownership in a company, but what about bonds?
So bonds are essentially loans that you make to governments or corporations.
Hmm.
They tend to be less risky than stocks, but they also offer lower potential returns. Think of it this way. Stocks are like a roller coaster. Bonds are more like a leisurely train ride.
Okay, I like that analogy. And then there are ETFs and mutual funds. Those can be kind of confusing.
Think of them like baskets holding a variety of stocks or bonds. This diversification helps spread your risk. So instead of putting all your eggs in one basket, you're spreading them across different investments. Diversification, got it. But there's one thing the book talks about that sounds almost too good to be true. Compound interest.
Ah, yes. This is where time becomes your best friend. Imagine this. You invest just $200 a month and get a 7% average annual return. Over 30 years, that small investment can grow to over $240,000.
Wait, what? How is that even possible?
It's the magic of compounding. It's like a snowball rolling downhill, getting bigger and bigger over time. The interest you earn gets reinvested and earns even more interest.
So the earlier we start investing, the more time that snowball has to grow.
Exactly. Even small amounts invested consistently can make a huge difference over time.
Wow. That's incredible. And the book also talks about maximizing tax-advantaged accounts like 401ks and IRAs, right?
Yes, those are important. These accounts can supercharge your savings by offering tax benefits. With a traditional 401k or IRA, you contribute pre-tax dollars, reducing your taxable income now. With a Roth, you contribute after-tax dollars, but your withdrawals in retirement are tax-free. So it's like getting a bonus from the government for saving for retirement. Are there any other, perks to these accounts?
Yeah, a lot of employers offer matching contributions to 401ks. It's basically free money. For every dollar you contribute, your employer might match a certain percentage, boosting your savings even further.
Free money. I like the sound of that. Woohoo. Wow, we've covered so much already and we're just getting started. We still need to dive into emerging trends and how to create those passive income streams. So much more to explore.
Yeah, it's crazy how much the world of finance is changing, especially with technology playing such a big role.
I know, right? And chapter 4 of this ebook just jumps right into these emerging trends that are going to shape how we invest in 2025 and beyond. I mean, honestly, some of this stuff sounds like it's straight out of a sci-fi movie.
Well, let's start with one that's been making headlines for a while now: cryptocurrency. I'll admit, I'm still trying to wrap my head around it all.
Me too. Seems like everyone's talking about Bitcoin and Ethereum, but it's so volatile. One minute it's skyrocketing, the next it's crashing down.
Yeah, that volatility is definitely something to watch out for. But, the book makes a good point. It's getting harder and harder to just ignore crypto as a potential investment. The key is to approach it carefully.
So how do they suggest we do that?
Diversification is key. They recommend limiting your exposure to around 5–10% of your overall portfolio. That way, even if there are some wild swings, it won't completely derail your whole investment strategy.
Okay, that makes sense. But how do you even pick the right cryptocurrencies?
Well, the book suggests sticking with the more established coins like Bitcoin and Ethereum. They have a longer track record, and they tend to be less volatile than some of the newer, more obscure ones. If you're not ready to dive directly into crypto, though, they also mention blockchain ETFs.
Hold on, blockchain ETFs, what are those?
It's like investing in the technology behind crypto rather than the coins themselves. These ETFs hold shares in companies that are involved in blockchain, development, application, all that. It's a way to get exposure to the potential of blockchain without that direct volatility of cryptocurrency.
Oh, okay. That's actually pretty clever. But safety is a big concern with crypto, right? I heard some scary stories about people losing their investments because they didn't take the right precautions.
You're right, security is so important. The book really stresses using cold wallets for long-term storage.
Cold wallets. I'm not familiar with those.
It's basically a physical device, like a USB drive.
Mm.
It stores your cryptocurrency offline.
Right.
Much more secure than keeping it on an exchange or an online platform, which are more vulnerable to hacking.
So it's like keeping your valuables in a safe deposit box instead of just leaving them out in the open.
Exactly. Adds an extra layer of protection. The book also talks about choosing reputable platforms for buying and selling crypto. Do your research, read reviews, make sure they have strong security measures in place.
Okay, crypto's definitely a lot to think about. Let's move on to another trend that I'm personally really interested in. Sustainable investing. It's not just about making money, it's about investing in companies that are doing good for the world, you know?
It's great to see so many investors aligning their financial goals with their values. The book highlights ESG criteria, which stands for environmental, social, and governance. It's a framework for evaluating companies.
So you're looking beyond just the profits. You're considering the company's impact on the environment, how they treat their employees, their ethical practices.
Exactly. And studies show that companies with strong ESG ratings actually often outperform their counterparts in the long run. So it's a win-win. You're investing in companies making a positive difference and potentially boosting your returns.
I love that. I remember reading about green bonds, which are specifically designed to support environmental projects.
Oh yeah, those are a great example of sustainable investing in action. Green bonds fund projects related to renewable energy, energy efficiency, pollution prevention, all those good things.
Okay, cool. Let's switch gears to something that feels a little more futuristic. AI in investing. Robo-advisors, algorithms, predictive analytics, it all sounds so high-tech.
It's the intersection of finance and technology, for sure. Robo-advisors are these automated platforms that create and manage your investment portfolio for you, based on your goals, risk tolerance, all that.
So it's like having a personal financial advisor, but it's all powered by like algorithms and stuff.
Exactly. They take the emotion out of investing,
Yeah.
using data and logic to make those decisions. And the book also talks about predictive analytics, where AI algorithms analyze tons of data to try and identify market trends and potential investment opportunities.
Wait, so they're like trying to predict the future of the market using AI.
In a way, yeah. They're looking for patterns and signals that could indicate which investments are likely to perform well. It's a pretty new field, but it has huge potential.
It all sounds so futuristic and exciting, but I gotta admit, part of me wonders if we're losing that human touch with all this technology.
It's a valid concern, and the
Mhm.
book emphasizes that AI is just a tool, not a replacement for human judgment. It's about using these technologies to enhance our decision-making, not completely handing over control.
Right, right. Speaking of exciting possibilities, let's talk about passive income streams. Chapter 5 is all about making your money work for you, even while you sleep. I'm all ears.
The idea is to create multiple sources of income that require minimal effort to maintain. Let your money generate more money on autopilot, basically. And the book covers a whole range of strategies: real estate, dividend stocks, online income opportunities, you name it.
Okay, let's start with real estate. It's a classic investment, but it also seems like a lot of work.
You're right. Owning rental properties can provide a steady stream of income, but it also comes with responsibilities. Property management, maintenance, dealing with tenants. But there are more passive ways to invest in real estate too.
Like REITs, I remember the book mentioning those.
Yeah, REITs or real estate investment trusts are companies that own and operate income-producing real estate. Think shopping malls, office buildings, apartment complexes. You can invest in REITs through the stock market, just like any other company.
So it's a way to get exposure to real estate without actually having to buy or manage properties yourself?
Exactly. And if you're looking for smaller investments, the book even mentions real estate crowdfunding platforms.
Crowdfunding for real estate, how does that work?
Basically, these platforms allow you to pool your money with other investors to buy shares in larger real estate projects. It's a way to diversify your real estate investments and get started with less initial capital.
That's pretty cool. Okay, what about dividend stocks? I've heard those can be a good way to generate passive income.
They definitely can be. Dividend stocks are shares in companies that pay a portion of their profits back to shareholders regularly, usually quarterly. The book highlights dividend aristocrats, which are companies with a long history of increasing their dividend payouts year after year.
So it's like getting a regular paycheck from your investments.
Exactly. And there's this cool thing called a DRIP, a dividend reinvestment plan, where those dividends are automatically reinvested to buy more shares, compounding your growth.
Hold on, can you explain that again? So a DRIP automatically buys more shares with the dividends you receive.
That's right. It's like a snowball effect for your dividend income. Instead of getting that dividend payment in cash, it's used to buy more shares of the same stock. increasing your ownership in the company and potentially leading to even larger dividend payments down the road.
It's like passive income on autopilot. I love it. But real estate and dividend stocks aren't the only options, are they? The book also talks about online income opportunities.
Oh, yeah. The digital age has opened up a whole world of possibilities. The book talks about creating and selling digital products like eBooks, online courses, templates. You create it once, and it can generate income passively as people buy it.
That's the create oneself forever model I've heard so much about.
Exactly. And it's not just digital products either. There's freelancing platforms like Fiverr and Upwork. You can offer your skills there. Writing, graphic design, virtual assistants, whatever your expertise is.
So even if you don't have a product to sell, you can still leverage your skills and talents to generate passive income online.
That's right. And for those who are a bit more comfortable with risk, there's peer-to-peer lending. Platforms like Lending Club connect borrowers and investors, so you can earn interest by lending money directly to individuals or small businesses.
Wow, so many different ways to create those passive income streams. This ebook has been eye-opening for sure. But let's face it, life isn't always smooth sailing. Chapter 6 takes a bit of a more serious turn, focusing on preparing for the unexpected.
Right. It's about building that safety net, not just for your finances, but for your overall well-being. The book covers three key areas: insurance, estate planning, and navigating market volatility.
Okay, let's start with insurance. It's not the most fun topic, but it's definitely important.
Absolutely. The book emphasizes having adequate life insurance, health insurance, and disability insurance. Life insurance protects your loved ones financially if something happens to you. Health insurance helps with those medical expenses. And disability insurance provides income replacement if you can't work due to illness or injury.
Yeah, it's easy to overlook those things when you're young and healthy, but it's definitely better to be prepared.
For sure. And then there's estate planning. Not something most people like to think about, but it's crucial to have a plan in place.
I'll be honest, estate planning sounds kind of intimidating. What does it actually involve?
It's about making sure your assets are managed and distributed according to your wishes,
Hmm.
in case of incapacitation or death. The book covers the basics of wills, trusts, and power of attorney.
Okay, can you break those down a bit? What's the difference between a will and a trust?
A will outlines how you want your assets to be distributed after you pass away. A trust is a legal entity that holds and manages your assets for your beneficiaries.
So a trust can be used to manage your assets while you're still alive, but it also outlines what happens to them after you're gone.
Exactly. Trusts can offer more flexibility and control than a will, and they can help minimize estate taxes too.
Interesting. And what about power of attorney?
Power of attorney lets you designate someone to make financial and legal decisions for you if you become incapacitated. Really important part of estate planning. Ensures your wishes are followed, even if you can't make those decisions yourself.
This is all really helpful. It's making me realize I need to get my own estate plan in order. But the book doesn't just focus on the worst case scenarios, right? It also talks about navigating market volatility.
That's right, because even with the best planning, the market can be unpredictable. The book offers some strategies for dealing with those ups and downs, like dollar cost averaging. That helps smooth out market fluctuations by investing fixed amounts at regular intervals, no matter what the market's doing.
So instead of trying to time the market, you're investing consistently, averaging out your purchase price over time.
Exactly. Takes the emotion out of it and helps you stay disciplined.
What other strategies do they mention?
They also talk about rebalancing your portfolio. That means periodically adjusting your asset allocation to make sure it still aligns with your risk tolerance and goals.
So if one asset class in your portfolio has grown a lot, you might sell some of those holdings and invest in another asset class to maintain your desired balance.
That's the idea. It's about keeping your portfolio in check, preventing any one asset class from becoming too dominant. And lastly, they emphasize having emergency liquidity. Basically, a portion of your portfolio that's readily available in cash or low-risk assets. This lets you take advantage of market downturns or handle financial emergencies without having to sell investments at a loss.
It sounds like this chapter is all about having a plan, being prepared, and not panicking when things get a little shaky.
Exactly. A balanced approach to managing your finances and your life. But it's not all doom and gloom. The book ends on a positive note with a whole chapter dedicated to tools and resources that can help you on your financial journey.
Okay, I'm ready for some good news. What kind of tools and resources do they recommend?
Chapter 7 is full of practical advice. They suggest budgeting apps, investing platforms, tax software, all kinds of things to help you streamline your finances. They also recommend books, podcasts, websites for continuous learning.
So it's not just about the tools themselves, but also about staying informed and continuing to learn about personal finance.
Exactly. And they really emphasize building a support network, connecting with financial advisors, joining online communities, finding an accountability partner. All that can help you stay motivated and on track.
Yeah, it's such an important reminder that we don't have to figure all this out on our own. There are resources and people who can help us every step of the way.
For sure. Sometimes just knowing you're not alone in this can make a huge difference. But we're not done yet. We've
Right.
covered a lot in this deep dive, but there's still so much to unpack. We'll be back in the next part to wrap things up and leave you with some key takeaways and actionable steps. Stay tuned. All right, so we're back.
Welcome back to the deep dive, everyone. We've been on this whirlwind tour of future-proof your finances, and I've got to say, my head is spinning with all these tips and strategies we've uncovered.
Yeah, it's a lot to take in, but hopefully you're feeling more empowered than overwhelmed. Remember, the goal isn't to become a financial expert overnight, right? It's about taking small, consistent steps towards a brighter financial future.
Exactly. Small steps. So let's shift gears a bit and talk about what our listeners can actually do with all this information. What are some actionable steps they can take, starting today?
Well, first things first, that financial self-audit we talked about. Grab a pen and paper or use one of those budgeting apps and really get a clear picture of your income, expenses, assets, and debts. It's like taking inventory before you go grocery shopping.
You got to know what's in the pantry before you make that shopping list, right?
Yeah. Exactly. Once you have that financial snapshot, you can start setting those smart goals. Think about what you really want to achieve. Down payment on a house, paying off those student loans. Make those goals specific, measurable, achievable, relevant, and time-bound.
It's okay to start small, right? Even just putting aside $20 a week can really add up over time. It's all about consistency.
Absolutely. Building good financial habits is like building any other habit. It takes time and effort, but the payoff is huge. Speaking of habits, let's talk about debt.
Oh, yeah, debt. That dreaded D word. It feels like a weight holding so many people back.
It can be, for sure. That's why the book really stresses paying down that high-interest debt as quickly as possible. Whether you use the snowball method, the avalanche method, whatever works for you, getting rid of that debt frees up more money to invest and reach those goals.
Right. And while you're working on tackling that debt, got to make sure you've got that solid emergency fund in place. Life is unpredictable, right?
Yeah.
Having that financial cushion can make all the difference when unexpected expenses pop up.
Exactly. It's like an insurance policy for your finances. Once those foundations are in place, the self-audit, the goals, the debt management, the emergency fund, then you can really start exploring the exciting world of investing.
Okay, investing. We talked about stocks, bonds, ETFs, mutual funds. Where should someone who's brand new to investing even begin?
Start with the basics. Learn about the different asset classes, understand how they work, figure out your risk tolerance. Diversifying your portfolio is key. Don't put all your eggs in one basket.
And remember that whole compound interest thing. The earlier you start investing, the more time your money has to grow. It's like planting a tree. The best time was 20 years ago. The second best time is today.
Exactly. And don't forget about those tax-advantaged accounts, 401ks and IRAs. They can really supercharge your savings with those tax benefits and potential employer matches.
Right, those are important. But the world of finance is always changing, right? We talked about those emerging trends, things like cryptocurrency, sustainable investing, AI-powered tools. Should people be factoring those into their investment strategies?
Those trends are definitely worth keeping an eye on. Do your research, understand the risks and potential rewards, consider incorporating them if they align with your goals and values. But remember, they're just tools. The most important thing is understanding your own financial situation and goals.
It's not about blindly following the latest trend. It's about making informed decisions that work for you. This ebook has been an amazing resource for sure, but it's really just the tip of the iceberg when it comes to personal finance, right?
Absolutely. There's always more to learn. Explore other books, listen to podcasts, read financial blogs, connect with others on the same journey. And if you're feeling lost, don't hesitate to talk to a financial advisor.
A financial advisor can provide personalized guidance, help you create a plan tailored to your needs and goals. But even with all the best advice and resources, the most important factor in your financial success is you.
That's so true. The most valuable asset you have isn't money, it's your mindset. Embrace a growth mindset, believe in your ability to achieve financial well-being, and never stop learning.
So well said. Financial empowerment, it's a journey, not a destination, right? We've covered so much in this deep dive, but really, we've only scratched the surface of this whole world of personal finance.
There's always more to explore.
If there's one thing we want you to take away from this, it's that you have the power to shape your own financial future. Take control, make informed decisions, and keep moving forward. Thanks for joining us on the deep dive, everyone. We'll catch you next time.